Ahora sí, gente, vamos con la mentorship. Vamos con la mentorship. Vamos para allá, gente. Vamos para allá. Bueno, que sepamos que íbamos por la 9, la habíamos visto, y nos toca ver la 10. Vamos allá.
All right, folks, welcome back. This is episode number 10 of the 2022 ICT Mentorship for the YouTube channel. This lecture is going to be teaching implementing economic calendar events with the open. All right, so the economic calendar, many of you probably don't even consider looking at this, but it's important if you're going to be learning how to speculate, study these markets. Certainly, if you're ever going to consider putting live funds in, you really want to know what this calendar says for the day you're going to be trading. Otherwise, you could be surprised, unfortunately, adversely, with a sudden rush of volatility that you wouldn't otherwise expect. This is Thursday's economic calendar for Thursday, February 17th. And not all of these things are going to be heavy hitters for stock indices, but
Le gusta las FOM a Michael.
Most of them are.
¿A quién no?
What I'm showing you here is what I teach all my
mercado.
students.
Si estás
I go to
dentro,
forexfactory.com and use their economic calendar.
Te la llevas toda.
It's not the only one you can use. It's whatever you like. I like the color scheme they use. It's just a personal preference. You can pick any economic calendar.
Michael se empieza a enrollar con los colores. Vamos a la chicha.
And I'm going to teach you here, and this is my honest to God's truth. Okay? I'm never going to be able to do it any easier than this, okay? You just have to study price action and you'll see it for yourself after a while. But this is really all I teach my students, and it is nothing more secret to it. This is it, okay? It's just the brass tacks of looking at what the daily range is likely to form. So right away, we're looking at the daily chart. And as I mentioned in the previous episode, I outlined this high here and this low, and that was the range we were within. And the 50 level was equilibrium. So again, above equilibrium is what? The premium market. And below 50% is a discount market. So we traded back up into the top end of the range between this low and this high. And between these two levels here, remember I gave you this low and this high. That's a imbalance. Okay, it's a fair value gap. This market was down in a discount initially after we had an indecisive candle. Go back and watch the 9th episode. If you haven't watched that one yet and you're watching this one, it's going to feel like even more confusion. But we had an indecisive candle here, and we were in a discount. Even though I believe, and I've been telling my own students that I believe we're going to clean out these lows out here, we went to a discount relative to the dealing range between this high and that low. So below it, we're at discount, and we have an imbalance. So it's likely to do what? Go back up and rebalance this before going back down. Listen to what I said in episode number 9. I said, even if we trade back up into this range, there's trades you can take even if we believe that it's going to go below those lows. That's me tipping my hand to you. I'm not trying to provide you signals. I'm not going to tell you buy here, sell here, put your stop here, take your profit. I'm not doing that. In a community tab on my YouTube channel, probably once a week, I'm going to point out something in the chart right before it happens, and I want you to try to study it. You may not be able to see it real time. You may miss it, come to the YouTube channel after work or whatever. Maybe you're sleeping and you couldn't see it at the time. But still go through your charts using the information I'm providing you. I get asked all the time, can you please put a date and time reference in the post? I forget. I try to remember doing it when I wake up if I'm going to post anything, but something happens and I see it in the chart and I must want to put everything in the post and I forgot it. So I apologize for that. It's a work in progress, folks. So if we look at the reference points of it being in a premium market or a discount market, but then we have this imbalance and we have a bias that, and it's likely to go down and take out these lows. So what do we said here in short? The market's been going lower. Yes, we took out some sell stops below this low with the sell side liquidity being taken out here. Then a natural retracement, which is reasonable. Then we start to decline. Then we come back up one more time. Failure swing doesn't go above that high. And then it breaks down and it creates an imbalance when it takes out this short-term low. Wow. That's kind of like the model I'm teaching you. Yes. Now, what's the framework here? We rallied, broke below a short-term low with the model suggesting that these lows may be taken out. So any rally or up-close candle or candles should be viewed as a potential shorting candidate. Now, ring in the imbalance. We traded up into the imbalance one more day. We swept above it, not by much. Then the next day we open, we rallied just a little bit, and then plunge. We took out the previous day's low and the day before its low. So both of these daily lows have been cleaned out. Now this one is the next one. Then down here. So when I talk about Power 3, I'm specifically dealing with this time frame, the daily chart. If you consider where the market opens, say this is the opening price, in a daily range if you're expecting it to go down, or maybe you weren't expecting it to go down. You were just looking at the price in your chart, and you see that the opening was here, it rallied a little bit, and it went down, and then closed near the low. Now, that's a rather simplistic overview, just making it very plain, nothing terribly exciting about that. But when you really start to consider it, it is really exciting, because this is the market right here. If you understand this, and you can study a daily chart, daily bias will become easier for you if you start implementing it with this mindset. So if we're bearish, okay, if we're bearish on a market, we're going to anticipate the daily ranges, or each one of these candles, doing this very thing here. Open, a rally, not much of a rally, but it can make a large wick. It doesn't make a difference. But the general premise is it goes up just to go down, and it closes down near its low when it's bearish. Obviously, this would be reversed, where the open would be down here near the low, and the close would be near the high of the daily candle if it's bullish. But not every single candle in a series of the entire price swing is going to be all up close candles when you're bullish. Conversely, not every candle is going to be a down close candle when you're bearish. But I've already taught you, when you have these sustained price swings on the higher time frame, you're not seeing a lot of up close candles when it's bearish, and you're not seeing a lot of down close candles when it's bullish. But contrast that with what you may be feeling when you're looking at price. You'll make a big deal out of one down day when you've been bullish, and it completely takes you out of your game. Oh, I can't determine bias. I don't know what's going on. This is always tricking me. I felt that too in the 90s. I know what it feels like. But let's take a closer look at this. This is the chart that I used to trade back in 1992. The classic open, high, low, and close bar, which is what I'm showing you here. Now, with this chart, it made perfect sense to me. And if my eyes were not as poor as they are now, because I'm aging and I've been looking at computer screens for 30 plus years now, it's worn them down. So obviously candlesticks are a much more preferred way of looking at it, because it's thicker. You can see the open and close relationship, as I'm teaching you here, a lot easier versus this. You have to strain to see where the opening is on this candle. Is to the left of the candle, or not, it's not even a candle, it's the bar. So to the left of the bar is the open. It trades down, creates the low, rallies up and closes near the high. You see that? Same thing here. It opens, trades down, goes up and closes above the opening, but in the upper portion of the daily range. Then we have a high where it doesn't really matter where it closes. And then it's likely to do what? Come back in and rebalance this. It'll make sense in a moment. And it opens here, small little rally up, creates this very thing here on this day. It opens, small little rally up, and then down, overlapping this daily bar. If we look at this relationship over here, we have this one single pass with that bar range between this candle's low and this candle's high. That's our fair value gap. The market can trade back up into it, and look where it closes, right on the highs. In the next candle, it's back and forth, works both sides of the range. But what is our bias? What did I hint at? The bias is bearish. We're looking for these lows to be taken out. So the only thing we were doing was coming back up to rebalance this, then go lower. So once we went back to the top of the range, did this candle or bar touch this candle's or bar's low? No. Just fell short of it. This wiped back and forth. So now this range here is completely balanced. So there's no reason for this price to hang around. Now, it could have went a little bit higher today, and I was waiting for that to potentially happen, but I've not abandoned my bearishness for price to go down here. All my students know that. This movement here, we have the open, the rally up, fade it, comes back down and closes on the low. That's this pattern right here. Power 3 is accumulation, manipulation, distribution. Okay, that's the three components. The power aspect is, if you understand those relationships on what the daily range is doing, the open, on a day that's bearish, okay, the open and anything above it, that is accumulation of shorts. Now, it's not limited to just open and above. That's where smart money and people like myself and my students, that's where we're aiming to enter getting short. It can be whatever the range is. This is important because my students are actually going to smile when they get this too. The open to the high, whatever that range is, you take that range and you subtract it from the opening price. That is your opening range. That's where your fair value gaps, that's where your stop raids are going to happen, that's where your optimal trade entry is going to happen. Every potential shorting candidate, whatever system approach that I teach, even in my paid mentorship, every premium array, okay, that's what I teach it as. Every single one of them will reside and form in the range between the open and its high. In other words, if you're watching price and you're bearish, the day opens up and then it rallies up. That's a Judah swing. The range from the opening price up to that high, that range is what you project below the opening price. That is your opening range. When I say opening range, that's opening range. So what that does is gives me an area at which to bracket out how much leeway I can give the market when it starts to go below the opening price and still take a favorable entry. Because power 3 is, I'm bearish, I'm expecting the market to open and rally above. If I can get something on short there, that's the ideal scenario. But I may not be able to do it. Or I may take a trade early, or just take a trade and I get stopped out. It's going to happen. But then it breaks down below the opening price. Does that completely ruin the day for me? Sometimes it'll just tear off and I can't catch it. It doesn't give me a setup and I just miss it. And you can't chase it and don't worry about it. But don't be upset. Just go back in your back testing and you'll see that there's lots of opportunities coming in just below the opening price. This is called close proximity
de hecho,
entries.
todo esto que está explicando yo lo explico en el módulo de precio y tiempo, ¿eh? Gente, yo sé que es soporífero, me lo estáis poniendo aquí. Porque acabas de dormidos, míralo en español, canal de Travis Forex. Gente, no hay forma de acortar el camino. O sea, este hombre es el creador de esto. Si te está dando la chapa en esto, es que hay algo a considerar en esto. Aunque ¿cuánto dura esto? 1 hora, pensaba. 1 hora. Bueno, si está 1 hora explicando, seguramente tenga 3 minutos de oro, ¿vale? Pero, señores, no hay forma de acortarlo. No hay atajo. Hay que pasar por esto. Es como un sarampión, ¿vale? Es como esto, cuando tú empezaste en el trading, no sabías lo que era una vela japonesa, estabas flipando. Entonces, no hay atajo. No voy a mirar canales de Travis, ni Trobos, ni Trubus, porque todos hacen lo mismo y mal explicado. Me voy al creador, a la fuente, y en inglés, que es quien lo habla y que lo dice, porque algunas traducciones también lo traducen mal, porque el traductor no es trader, el traductor es un traductor y te va a decir cosas que no vas a entender. Así que hay que pasar por esto, gente. Es un sarampión. El que no lo haya visto, yo he visto gran parte de la mentoría de 2022, hay algunos vídeos que me los he saltado, por esto mismo, como son soporíferos, e intento ir a las cosas que son un poquito más amenas. Pero considero que si hay 41 vídeos, hay que hacérselos todos. Y este es el creador. Y una vez te ve los 41 vídeos, nadie, en ningún otro canal, porque hasta hoy hemos reaccionado a cientos de canales, no va a explicar nada nuevo. Porque yo no lo he visto. Muy pocos canales. Ya me he visto las mentorías y aún me las sigo viendo y cada vez descubro más detalles. Es que es así, es que no hay forma de saltárnoslo. Y los que buscáis Travis, Trobos y Trubus, seguir en Travis, Trubus y Trabas, porque es que no vais a avanzar. Aquí es donde está la chicha. Lo coges, lo tomas o lo dejas. Lo tomas, hay que aguantar. Lo dejas, sigue tu camino, tío. No avanzarás. Es que no hay más.
This is what I promised in this mentorship on YouTube. Teaching you in the mentorship community, I already know most of you that have recently found me, and there's been a lot of you that just came on, and I appreciate all of you joining me, but you don't know all the things that I've been teaching on this YouTube channel. So you feel like you're drinking from a fire hose right now, and it can feel like it's tearing your face off because it's so much information all at one time, and it leaves your head spinning. Like, this guy keeps talking, I don't understand. Get to the point. The point is you need to have layered understanding. And if you're not going to be patient and go through the content properly, I'm not going to help you. I'm going to frustrate
you. Es que lo está diciendo él mismo. Es que ha venido al cuento, yo creo que él lo sabe. Los 15 minutos, dice, a los 15 minutos, yo en mis estadísticas de YouTube veo que la gente se pira. Y la otra mitad está dormida. Es que él mismo te lo está diciendo.
And you'll probably come back to me later on and then learn properly and wish you would have stayed and did it the right way the first time. But
luego volverás a mí y aprenderás correctamente. Es que es así. No vayáis a trabas, trobus ni trubus, tío. Es así.
Having the opening range. When you're bearish, whatever the high is, from the opening, project that down. Your sell setups are going to form in that. That is accumulation of shorts. The manipulation is the initial rally up. That's the sucker play. That's typically the breakout artist thinking, oh, it's going to go higher. No. It only goes up just to go down. That's a fake run. Then it goes lower, creates the low of the day, and then closes near the low of the day. So between where the low of the day is and where it closes, that's distribution. What's being distributed? Smart money's short positions. So they're selling at the open and above or just below it, riding out the daily range. When it creates the low of the day, how do you know when the low of the day is formed? Well, I've taught you time references. So if price has been really taking a beating going lower, and you're getting towards the end of the day, like 3:30, 3:45, something like that, it's probably really close to the low. Not all the time. Sometimes it creates a real fast, sudden continuation. And if you're not expecting it, or if you're offside, it can be bad. But if it's one side, it's really fun to be a part of that. But generally, it's the last portion of the trading day and it'll create some kind of a low. And then wherever it closes, between that low and where it closes, that's where the distribution cycle is occurring. That part is not that important. The main thing is understanding what does this candle have the highest probability in terms of forming? An open, rally, sell off, and close down on its low? Or is it likely to create an opening, trade lower first, then rally and close near the highs? Let's take the close out, okay? I don't want you thinking that you have to know or be able to predict the closing price. That's more advanced. You don't even need that to be profitable. You just need to know, is this daily range more likely to expand higher or lower than the opening price? That's it. That's all you have to do. That's the key to bias.
¿Será posible que todo este material, todo lo que está diciendo, es justo lo que hablo en el módulo de precio y tiempo, tío? Yo a veces me asombro, ¿eh? Ese módulo, o sea, es desarrollo mío. Pero es que todo esto que está explicando lo explico yo casi igual.
Now, how do you know what the bias is going to be most likely?
Yo creo que lo explico
Not
mejor.
Everyday bias.
En serio.
Most likely.
No
What's the bias going to be? Well, let's go back to this low over here. It creates a swing low. That means a low with a higher low to the right of it and a higher low to the left of it. So it's 3 candles that make up a swing low. You do not need a Williams fractal. That's way too many candles and you've missed a move. Okay, you don't need that. No disrespect for the gentleman, but that's nonsense. You don't need that. Okay, you only need 3 candles. Once you get a swing low or a swing high and you have the proper context and you know what you're looking for, that's it. You go in and you start hunting it. Now watch what happens. We have a swing low form. The very next candle, we have an opening. It trades way down and then comes back up and closes right near the highs. Is that the opposite of this candle?
Exactly.
Yeah, but it's got a whole lot of movement below the opening price. So something just took place down here after the swing low was formed. Did this candle or bar go lower than that one? No. I promise I'm going to switch the candles, but I just want to show you from this perspective because this is what we were forced to learn on back in the old days, okay? Back in the dinosaur time. So the rallying up on this candle here and closing on the high, that supports this as a swing low because it didn't take out the lower low right here in the middle. Between this low and this low, this is the lowest low of the 3 candles or price bars. The next day, we have a big washout from the opening, trading down, and then it closes on the high. So the next day, we're likely to go what? Into this area here. Isn't that a fair value gap? Sure it is. What's the daily bias likely to be? Bullish. So that means it's going to do the opposite of this. It's going to open near the low and then rally and expand higher. Will it close on the high? I don't know. It could, but I don't need it to. I only need it to open and start to rally and get up in this area here. That's an opportunity. That's a trade. Does it do it? Yes. But now when we trade it up into this area, look what happens. Next day, you might be expecting an open rally, close high. It doesn't give you that. So that could be a day where you missed an opportunity or you took a loss. No problem. Next trading day here, what are we seeing? We're seeing the market retrace back down into this run. How far can it go down? Well, look at your high down to your low. Equilibrium, it's probably going to go below equilibrium. To do what? To offer the market a discount. The market does what? It goes down below it, provides a discount. Once it gets there, our mind, we're thinking it's going to be the opposite of this. It's going to be to open near the low and expand higher. That's power 3. It's going to be accumulation of longs at the low and then rally higher. We have it right there. It opens near the low, rallies, and closes on the high. The next day, same thing. Opens on the low, rallies, and closes on the high. Now we've gone deeper into this area here, and in a small little range, but it's still the same function of power 3. Accumulation, which is open near the low, trade down, and then close high on the daily range. Next candle, same thing.
Uf, cómo se enrolla, tío. En serio. Uf, ¿va a ir vela, tío? Joder. ¿En serio ha ido vela? La Virgen. Bueno, a ver si hay un poquito más de acción, porque si no esto es insoportable, ¿eh?
Okay. All right, let's drop down to an hourly chart. And that fair value gap, the high and the low levels, that's what's being shown here, right there. And these annotations are obviously from what you saw on the episode 9. So watch what happens. The market trades down, finds some support at the low end of the fair value gap, then rallies back up to the high end of the fair value gap, and then breaks right before midnight on the 17th. And then we consolidate, trade back up into what? What is this? What's this right here? It's a fair value gap. Price goes up, rebalances that there. And it's doing it, what time of day? Not New York. It's overnight. European London session. That's just how you can use that model. The same model. You can use it in an Asian session. You just ain't going to get a lot of movement because it's typically not a lot of movement in that time of day.
Un gráfico de una hora.
But you can trade it in London close. You can trade it in, obviously, the New York Open, like I'm teaching you, and London Open. London Open, if you know what you're doing with the daily bias, you can catch enormous moves. Enormous moves. But sometimes you're going to have to weigh out a lot of give and take back and forth, kind of like today, where the market rebalanced here and then consolidated and waited for a little bit of a push higher. Then the news came out. Okay, so I'm going to hopefully clear that up for you now. All right, 15-minute time frame. I'm going to take a look at this imbalance here. We rode up into that, rebalancing all this movement down. Remember that paint roller analogy I gave you? The paint was applied to the wall going down, but if all this movement was given to that one single candle, there's going to be little porous places in prices between the high and the low where the market wasn't efficiently offered for buyers. There wasn't much time and back and forth pricing to give buyers an opportunity to get in there and participate. So an efficient market will see the market go back up and reprice that. So it's down and then right back up, like paint being applied to a roller on a wall. You want to make sure you go back and forth to deposit the paint evenly. So there's an even distribution. So again, the background of this chart, that's the wall. And every one of these candles is a paint roller. And whenever you see these big, long, drawn-out candles, there's a strong tendency, not all the time, but there's a strong tendency for the price to go right back up and overlap over that entire range. Same thing over here. We have the market drop down, creates a fair value gap here. Doesn't it take out some lows over here? Yes, there's displacement. And then you can have an order to get in short here. But then watch what happens. This little pump up. That might be scary. It could have stopped you out if it went higher. That's the risk in this, folks. I'm not going to give you a silver bullet that removes losing trades. I lose trades too. You're going to miss moves. I miss moves. Okay. You're going to read it wrong. I read it wrong sometimes. Okay. I'm not perfect, but I'm giving you tools and processes to help you determine where the most likely scenario is going to be. And then you just work those statistical odds and hopefully with sound money management, which I'll cover, which will hopefully get you to the winner's circle more often than not. All right. So we have the morning session starting before 8:30. We have a rally up and then it breaks lower. In this area here, we're going to drop down to a lower time frame. But before I do, I want to give you a little bit more details. Think about what I've taught you so far in this teaching for Power 3. The accumulation, manipulation, and distribution cycle of the daily range. If we are trading near the high end of that fair value gap on the daily chart, that's what that level is, okay? When we just drop down to a lower time frame chart. So with this 15-minute time frame chart, and I apologize, the chart's a little bit shifted. It's still the same chart, I just added the annotations. The idea is we're expecting...
De todo está bien leído, ¿eh?
Power 3 formation.
Cuando te lo paras a mirar bien, está bien leído.
Create the high of the day, sell off, and close near the low. That's what we're looking for. Why would that bias be expected on this day? Because we worked the upper end of that.
Y con esto acabamos, gente. Está muy bien leído a nivel macro. Luego, cuando hace el midnight, yo aquí, de esta operación, yo aquí no sé si hubiera operado. Él dice que sí. Midnight, fair value. Yo aquí no hubiera operado, pero ¿sabéis dónde yo sí que hubiera operado? Aquí. En este flip. Aquí sí que hubiera operado, porque lo rompe con imbalance. Esto es un gráfico de 15 minutos. Al romperlo con imbalance, se va a la baja, no retrocede. No es una toma de liquidez, sino que cae. Y esta flip zone te permite poner un stop loss aquí arriba, muy pequeñito, en el order block, recuperar toda la ineficiencia y buscar un sell side del lado izquierdo. Pero lo tomes donde lo tomes, él dice por aquí, ¿vale? Yo aquí quizás no lo hubiera atinado, porque para mí no encuentro nada que me haga pensar que tenga que ir abajo. Sí que es verdad que él marca esta zona como sell side. No sé por qué, muy bien. Ah, porque es el bajo del día anterior, vale. Ya digo, si yo hubiera operado algo en esta sección, hubiera sido esto. ¿Vale? Bueno, gente, con esto llevamos 30 minutos de vídeo. Lo vamos a guardar el vídeo. Y otro día hacemos los 30 minutos que nos falta, porque no nos podemos perder las mentorías. Así que mentoría de Mentorship 2022 de ICT, episodio 10. 30 minutos llevamos. Ya os digo yo que es. He intentado entrar con la Championship, a ver si nos despertábamos un poquito de emoción, pero esto ya te ha bajado el ánimo, tío, te ha bajado el ánimo. Pero es muy interesante, hay que pasar por esto, gente. De hecho, me es curioso porque éramos 25 antes de empezar el vídeo de Michael y ahora somos 13, somos casi la mitad. Así que la gente no aguanta la gente. La gente quiere, pero es compra o venta. Dime la entrada del stop loss y el take profit. Déjate de historias. ¿Vale? Así que aquí aguantamos los machotes. Los machotes, gente. Give me five. Fuaka, give me five. Bueno, gente, mañana seguimos con la media horita que nos falta y nos queda... No, esta vez no es un vídeo. Nos queda una cosita más. Así que like para Michael y seguimos con en la última sección de la tarde.